was a strong finish to an extraordinary year, and I would say I'm proud of the way we led. And of course, in the middle of the pandemic, where we stepped up to deliver the respirators, 2 billion produced and distributed in 2020. But we also invested in growth at the same time, and really in some of the positive trends that we're seeing as we came into fourth quarter, and what we see as improving outlook in some of these end markets as we go into 2021. So that's a big part of the story, where we're investing in those growth areas, in areas like continuing personal protective equipment, but also home improvement, home care, electronics. There are segments of electronics that are very strong as we exit the year. And then we're seeing improvements in automotive build rates and the outlook for those as we go into the new year. I did highlight on the call some of the end market segments that continue to be weak. We see, as people are still working remotely, we see our stationary and office supply business impacted. People are not in the office using those products. We're seeing our commercial solutions business impacted as people are, again, not maintaining or upgrading their office and commercial settings. So there's those kinds of end markets. We also highlighted there's still uncertainty in the middle of the pandemic. We have uncertainty on even some of the trends. How are they going to continue to play out? It'll depend on the COVID-19, how it progresses, how the economy continues to move forward, even how it impacts some of those end markets that were strong before. So there are segments that we see that are still challenged. We talked about elective procedures in healthcare still being down year over year, and that's projected to continue as we go through 2021. We're seeing hospitals working to preserve those and move those up, so we'll see hopefully some improvements there. But that's again tied to the pandemic.
Although not enough uncertainty for you to no longer offer 2021 guidance, what did you see that at least gave you the confidence that you could go out there with some guidance for this year?
Well, I think those end markets that were strong and some that were improving, you start to look through those, you can see the underlying dynamics stabilizing. Now that still is, the caveat is how the pandemic progresses can impact that. So we have guidance ranges around some of our businesses. We talked a bit about it on the call around electronics. It's a little wider than normal because of that uncertainty, even as we look at the guidance. But we're confident the underlying stable trends of these markets look to be improving. We're looking through the whole year on expectations. We're also building it off of a view of each of these markets. And so you look at the projections, again, build rates for automobiles expected to be up mid-teens as we go through the year. So that's a basis that we look at. We talk to our customers. They're seeing the same things. And absent a change due to the pandemic, we would expect that kind of growth. So those are the things that fundamentally are giving us a little better view through the markets in 2021 and built into that range of 3 to 6.
Shepard Smith here. Thanks for watching CNBC on YouTube.